Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Wednesday, the 10th of June, 2026. It's my son Rhett's birthday, shout out to him. But more importantly for you as traders, it is US CPI day, and we have some new developments in Iran. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. First, checking in on Iran, the tune has changed. After a series of skirmishes yesterday, President Trump tweeted this morning that Iran is taking too long in its response to the latest peace proposal and that it will have to pay the price. This, of course, is an escalation in rhetoric after some of the exchange strikes that we saw yesterday, and markets are on the back foot on that news, with oil on the rise 1.5%, U.S. indices falling at least 1%. Gold, in particular, more on this in a moment, is falling 3%, while the U.S. dollar is flat. The biggest news, though, of the day was the US CPI report, which came in mostly as expected. It came in at 0.5% month over month, 4.2% year over year. That is the highest reading that we've seen in the last 3 years, but it is also perhaps lower than many had feared. I will note that the unrounded year over year inflation rate was 4.249%. So it's very, very close to rounding up to 4.3%. Either way, this is not what the Federal Reserve wants to see. It likely takes interest rate cuts off the table anytime soon and could force the Federal Reserve to hike sooner rather than later, especially if we continue to see higher inflation readings. I will just touch, though, on the core CPI reading, which is a closer proxy for what the Federal Reserve is watching. That also came in mostly as expected. The month over month level, though, was a tick lower at 0.2%, 2.9% year over year. Nonetheless, this is something that is driving markets as we head into today's US session, and in particular, we are seeing a big move in today's chart of the day, which is gold. Gold has essentially cracked after breaking below its 200-day moving average for the first time since October 2023. That happened last week. We've already seen a 5% downdraft. That's about the move lower we saw the last time we broke the 200-day moving average nearly 3 years ago. Looking at the technicals here, there is a key support level. That panic low that we saw in late March comes in around 4,100. That'll be the key level to watch. Bulls can hold out hope that we'll get at least a bounce and some sideways price action as long as that level holds. But if we see continued weakness and we slice through 4,100, the next level of support isn't until below 4,000, near 3,900. So that's the key line in the sand to watch today and perhaps through the rest of this week if you're trading gold. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask just one quick favor before you go, please do drop a like on this video. It's a great free way to show your support that will help us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.